Hey everyone, welcome back to Corporate Decoder, the place where we dig into the documents Wall Street hopes you won't read. Today, we're decoding Mirion Technology's latest annual report, a company specializing in radiation detection and safety. Think nuclear power, cancer treatment, and defense applications, the warm, fuzzy stuff. This report is full of twists and turns, just like trying to navigate a nuclear reactor without a Geiger counter. We're diving into Mirion's year, looking at how they performed, the challenges they faced, and what their plans are for the future. It's a bit like looking into a crystal ball, but instead of seeing mystical visions, we see financial figures and risk assessments. First things first, Mirion wants to remind everyone that they're making educated guesses about the future, and there are a lot of things that could throw those guesses off. We're talking geopolitical instability, trade wars, supply chain headaches, and even the public's fear of nuclear energy. These are not guarantees, just their best estimates. Think of it as a cosmic disclaimer, your mileage may vary. So what exactly does Mirion do? They're in the business of protection. They provide the tools, services, and software that allow companies to safely use ionizing radiation in fields that benefit the human experience. Health, safety, and technological progress. It's a complex industry with customers ranging from nuclear power plants to cancer centers, all needing to meet strict safety standards. The nuclear power market is looking promising. Countries are turning to nuclear energy for security and to address climate change. Even data centers and artificial intelligence are creating more energy needs. This market has three categories: new construction, upgrades of current buildings, and taking old ones apart. In healthcare, the increasing cancer rates, advancements in treatment, and the rise in diagnoses are expanding the market for Mirion's products. Mirion's product offerings can be grouped by their two segments. In nuclear and safety, they offer monitoring systems for power plants, instruments for research labs, and technologies for military and defense teams. In medical, they sell quality assurance tools for cancer treatment and dosimetry services to protect healthcare workers from radiation. Mirion highlights their strengths. They've been around for over 60 years in the ionizing radiation detection, measurement, and monitoring sectors. They also tout their broad product range in medical and industrial markets, high barriers to entry because of the technical requirements, and the global footprint they have. How do they plan to keep growing? Mirion's strategy focuses on going after untapped markets, expanding their reach geographically, outsourcing, and expanding into new emerging markets. A big thing for them is also software. Introducing new software applications, both on-premise and through the cloud. Now let's look at future revenue. As of the end of last year, Mirion had about $811.9 million in remaining performance obligations. That's money on the books from already committed contracts. About 54% of that is expected to turn into revenue this year. Who are the major players, those who they're going up against? In nuclear and safety, they have companies like Thermo Fisher and AIMTech. In medical, they compete with companies like Fortive and IBA. Mirion's research and development is crucial for developing new products and maintaining compliance, and has a big team dedicated to it. Last year, they spent about $35 million on it. Time to look at risks. They have incurred operating losses and may not achieve positive net income. Russia and Ukraine have also had a volatile geopolitical effect on the company and could continue to do so. Public perception of nuclear energy and public safety, the supply chain, and sales cycles in certain end markets have all also presented risks. And speaking of risks with Russia, they had a customer make a claim against them of about $19 million, which went up to $21 million. That issue is now settled with a modification of the underlying contract and an agreement to refund money. These volatile geopolitical conditions have heightened risks to the company as well. Another risk to note is that Mirion operates in multiple countries and are subject to complex business conditions and regulatory environments. Revenues from the US government also affect a substantial portion of Mirion's business. And watch out for AI. The use of AI and machine learning may subject them to legal and regulatory scrutiny. We need to talk cybersecurity these days. They're always at risk of attacks. Mirion uses ISO 27000, a risk-based approach to improve their security. That approach includes annual employee cybersecurity training. The audit committee also reviews the cybersecurity risk. Also of note, 3 of their board members have been cybersecurity trained and certified from the National Association of Corporate Directors. Mirion is headquartered in Atlanta, Georgia, and they lease 2 buildings there through 2031. They also have locations all over the world. Now for the juicy numbers. They are not yet assured that they will achieve positive net income. Last year, revenue increased to $860.8 million, up 7.5% from the year prior. Decreased a bit from $857.1 million to $811.9 million. Their biggest markets and customers are in medical, defense, and nuclear industries, and they have government customers too. To get to their goals, they plan to expand their addressable market and develop new products and services. Software is also a strategic focus. About 54% of that remaining performance obligations that I mentioned earlier is expected to turn into revenue this year. As we mentioned before, one of their strategies is to exploit underpenetrated market opportunities. For example, they've developed new dosimetry services and radiation monitoring solutions to expand in civil services and nuclear markets. Mirion has been deemed a large accelerated filer, meaning they're subject to higher compliance standards and quicker deadlines for their filings. Now that we're at the income statements, you can see there was an increase in sales of $800.9 million last year to $860.8 million this year, and the net loss improved from $98.7 million to $36.6 million. So far so good in revenue, but losses remain. If you scroll down, we can also take a look at the non-GAAP financial measures. They use something called Adjusted EBITDA as a guide. Adjusted EBITDA is used in the calculation of the first lien net leverage ratio in the 2021 credit agreement. Keep in mind, not all companies use this same measurement of EBITDA, so it's better to consider the GAAP numbers. Leadership thinks their financial and disclosure controls are in check as of the end of last year. The company follows a strict code of ethics and business conduct for all their employees and have adopted policies to comply with all regulations and rules. And finally, the documents are signed off on to be correct and accurate, ending the hundreds of pages of their annual report. So what's the verdict on Mirion? Well, the market they play in seems to be increasing over time, and they're a global leader. One thing to keep an eye on is their debt. Also keep a heads up for any political event that might hurt them and the global risk of reliance and impact of a customer base. It's a complex business in a growing market with some improvements, and we see a continued growth trend from where they were a couple of years ago. While there are losses, this past year looks better for them. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, please hit that like button, drop a comment, and subscribe for more deep dives into the world of corporate finance. Until next time, stay informed and stay critical.